All right, I know you're aware of what's happening with inflation and, of course, what's going on with interest rates. But the information I'm going to bring you today is going to highlight where we could end up. Now, that's going to enable you to potentially buy assets near their bottom. It's also going to enable you to stay away from potential danger. So I'll bring that all to you. I'll explain what's happening in detail, and then I'm going to show you a little breakdown. So stick with me until the end, because that breakdown is going to make a whole world of sense right here. Goldman cuts U.S. growth forecast for 2023 after rate path change. So essentially saying that, hey, interest rates are rising because inflation is rising. As a result, we are going to have to say, nah, you know what? The growth just isn't going to be there. You will see article after article and analyst after analyst determining the same information. But what I'll show you takes a little bit of a different turn. Here we have markets roiled by inflation leave investors nowhere to hide. So apparently you can't hide anywhere today because all assets are falling. In fact, what they say here is that the retreat of commodity prices does away with the inflation hedge. History shows no major asset class will provide a haven. I'm not so sure about that, but that's what they're saying out of Bloomberg. So they do get into some info here, and I wanted to bring it to you, and I'll show you this one and another one that's just absolutely filled with charts, and we're going to go around the world. I wanted to cover it for you. For investors burned by inflation, a very bad year is starting to look even worse. As stocks tumbled, bonds were hit with the deepest losses in decades. The surge in consumer prices turned a few corners of the financial markets into profitable refuges earlier this year. Oil prices rallied, commodities did too, even home prices and rents propped up the real estate sector. But the hiding places are rapidly disappearing. Basically saying that, hey, look at what's happening with energy and look at what's going on with commodities in general. You look at lumber, you look at all these other ones that have come down significantly from their peak. So you can compare core inflation, energy inflation, and headline inflation. All of these, obviously, look at commodities, off the charts. That's the second one from the left. But you compare that to other things like treasuries and corporate bonds and so on, and you see that they have not performed very well, to say at least. When I see certain things like the US dollar rising considerably, I have to understand that this is always compared to other currencies. This is always going to be compared to its peers. At the same time, what are we measuring this against, okay? If it's just against the peers, are we measuring it against real goods? Then things start to look a little different. You can measure two things against each other. For instance, how much of the stock market to compare to how many hours worked. You can look at different things like that, and it gives you a really good perspective on, is something actually cheap or is it expensive, and so on. It's not always in dollar terms because the dollar is fluctuating day to day. Let's look more into this. Here you can see just essentially saying what we already know. I don't want to just go on in every video telling you that inflation has been rising. You know that already. But you can see time and time again that we have encountered higher inflation rates, and the only way to stop that, of course, is higher levels of interest rates. And I do not think that we are going to see that coming in 2022. I think there's much more to be done. ECB's lane sees several more interest rate increases ahead. Now, this one individual here, he's more to the dovish side and sees that they have to do more. They have to do more. And what does that mean? It means that there is even slower growth coming along. That's the takeaway. That's all. Then we have this. Top grower Brazil's coffee supplies has never been lower. So you have to understand what's happening here. With these commodities, we need more of them. We need more growth. We need more output. We need more input. We need everything. And yet it seems like every aspect of this has been breaking down over the last couple of years. So we've got the coffee situation, and for a lot of people out there, that is an issue. Now, what does this do? You got to understand. Let me break it down for you. When you have coffee, what are people going to do? Are they going to not have coffee? Probably not, but they choose cheaper sources of that. So you might not go to Starbucks anymore to buy a $9 cafe latte suppuccino, but instead you're going to go and you're going to get the Folgers instant crystals, let's just say. And so you're still going to get your coffee, but you're going to get it in a cheaper way. And so these patterns here will, of course, unravel through the period. And we're going to notice that, and I'll bring you updates on it. And that just gives you a little bit of an idea of consumer patterns changing. Now, you might not shed a tear for Starbucks, but what does that mean? If Starbucks isn't doing so well or as well as they were before, their stock starts to come down, they start laying people off. When the time comes to bring people back in, are they going to have digital baristas? Are they going to have what they had before? Probably not. They're going to try to find a way to modernize, aka increase productivity, aka get rid of the humans and bring in the robots. These things are changing, and they're changing extremely fast. Many different fast food chains have brought in robotics to replace the humans. Then we have this. Look at what's happening with energy prices. We have this. Germany's working on a historic takeover of, get this, 3 gas companies. This is incredible, to say the least, okay? So this is something I talked about before. Just wanted to give you an update on that. When you see governments taking over things like this, it is worrisome, to say the least, because many people see it as a resolution. But if you look at Fannie Mae, Freddie Mac, it was not a resolution at all. In fact, it's a very big problem. Okay, this is the one that I'm going to take you around the world with. And we're looking at, in the US, persistent price pressure. So we see how much inflation has taken off over the period, and it shouldn't surprise anybody. You can see top freight, corn, wheat, soybeans dominate US agricultural rail shipping, which would of course be significant if the whole rail crisis actually happens. Right now there's been a sort of temporary deal going through, a tentative railway agreement. We'll see what happens if they actually do that, or is it going to be like 1992, and that will be a very big problem for agriculture and other things as well. Europe, UK inflation may be nearing its peak. The supposed inflation peak will be 10.5%. I'm not so sure, but of course that is still significantly higher than where we've been in a very long time, okay? And they're going to bring interest rates up during the period, so we'll see what happens. This is just showing us consumer-facing services and information drove economic growth in July. When you compare that, UK is in a very different spot than they were a few years ago, right? Things were really slowing down. Inflation, oh no, what's going to happen? And is it deflation in Europe? And now, too much inflation. Well, look at Japan's record trade deficit continuing to keep downward pressure on the yen. This is incredible. This is a country that will never be turned around in the foreseeable future. That's for sure. I don't care how many people suggest that Japan is the country. They did not have hyperinflation. They're fantastic. They're so wonderful. Well, I don't really like cheerleaders. I got to be honest with you, okay? Not a fan of that. The rising cost of living is hitting all groups of people. Sure, it's hitting those at the lower end of the spectrum that, do not have $100,000 plus. They're being hit by that as well. You can see right here. This goes for every country, by the way. A breakdown of the rising cost of living. It's just showing us, this is crazy, but look at it. This is the UK. The total amount needed each week increased by 26.8% from 2021 to 2022. So you just need more every single week just to keep up with the price increases. It's just crazy. It's crazy. That's a crazy stat. Germans are angry at surging energy bills. They're taking to calling up their suppliers in droves to vent their frustrations. Again, same situation. Prices are increasing, whether it is in the UK, whether it is in Germany or Canada or the US, prices are rising and they are not going to come down anytime soon. But let's talk about that more in just a second. This is what I wanted to highlight, okay? First things first, let's address the problem. Let's look at what's happening, and then we'll get into what's being done and what we need to do. All of that will be discussed right here, right now. I hope you appreciate this information. I want to bring it to you as quickly and concisely as I can. So here we go. First thing, let's get this down, okay? Inflation is rising. We know that. No matter what stat you use, it's still rising. Interest rates are also rising in order to combat that inflation that's rising. Then we have markets that rely on cheap debt. So this is an issue, right? All along, throughout this period, we've been loving that cheap debt. And now it's much more expensive. So what happens? Well, now corporations buy back less. Okay, their stock buybacks, they're doing less of that. Their expansion, what were they using to expand? Well, they're using debt. Well, you can't do that anymore. Consumers need easy money to persist. They're borrowing on the cheap debt. They're taking their home equity line of credit. They're using their personal line of credit. Any sort of form of relatively cheap debt, they're going out. They're buying a boat. They're buying the Tesla. They're buying all these things with cheap debt. And that has changed. Okay? We have this. What are the effects of that? Well, you could see that people cannot afford non-essentials. And when it gets to an extreme level, you see people saying, you know what, I just don't need that Starbucks coffee anymore. I just don't need to, buy this or that. I'll still, buy what I need to, my food, and keep the house and the lights on and so on, but I don't need to buy that. And this starts an issue because companies start layoffs. Companies cut costs. They might, in terms of cutting costs, that is including the layoffs, but also at the same time, maybe they're not going to get those new computers. Maybe they're not going to get those new office chairs. All of these things help the economy, right? Companies cut costs. Lower profits put downward pressure on the stocks. You see what happens? So they report their earnings. They say we don't have the profit we once did. And that, of course, affects their bottom line. You see what's going on with the investors as a result. They start pulling out. They start selling. Analysts say this is no longer a buy. You go to sell, and so on. Economic growth slows and actually may contract. So this is the effect of all of that. And then we go to the last thing. How do you predict the bottom? How do you know when that's enough and now we're going to go up from this point? Well, here are a few things, just a few, of course. But one, you have to analyze this from all angles, and I covered a few points in here. The rhetoric in the news is not going to be accurate. In fact, it may be the opposite. So when they're saying, this is it, oh my goodness, Jim Cramer's out there saying buy gold, that's usually the case where it's the opposite. Too many speculators are betting on the market falling. That's one indication. You can use puts. How the put volume gets to a historic high. And then you say, well, if everybody's going this way, it's probably the other way. Companies have failed. Bailouts and acquisitions. So when you start to see that kind of thing happening, like we're seeing the energy companies with the bailouts, okay, good indication. Acquisitions. Are we starting to buy up companies on the cheap? Is that happening? So these are indications as well. Inflation rates begin to decline. We've seen that in some cases. Inflation start to come down. And then, by the way, these are their official numbers. And the official numbers are important. I want to highlight that also because this is what the algorithms are trading on, right? We know the inflation rate's higher. We know the unemployment rate's higher. We know. But the algorithms trade on these fake pieces of data. And of course, interest rates stop increasing. So if they see the actual inflation rates declining, well then the corresponding effect will be apparent. Stocks rise, so we see the stocks rise, and then real estate could be delayed, really depends, between 6 months and 18 months, okay, where they kind of find a bottom, depending on inventories and so on. So it might just be a 6-month delay, and then it kind of bottoms out. We start to see mortgage rates declining, people start getting in, and so on. So those are the points that I wanted to make, and it gives us a little bit of perspective because this is the time, I try at least on the weekend to include a video that isn't just news, but taking the time to break things down. And actually, I've been doing this on every single video at the end to show you the information and then give you a little bit of insight to make it simple. So we have these fundamentals in place. We have interest rates, we have interest rates and inflation rates and the amount of current debt that's out there. And of course, in order to service that debt, they have to pay up more and more as interest rates increase. So what do we have? Well, we have a car right off the cliff, but this isn't the end of the story. Things are always in flux. So we pay attention to this data, and hopefully it tells a story, It's hard to know. I mean, I've been looking at this information. Nobody knows. The stocks are going to drop tomorrow. Stocks are going to go up tomorrow. Real estate's going to go down 30%. There are some saying 30% declines from this point here. Others are saying 30% from its absolute peak. Well, it depends on the market. How much did it go up in the first place? What's going on with interest rates? What's happening with inflation rates? All of these are constantly in this little, tumble, and we don't really know where we're just going to end up coming out of that. But we follow the data, and that's what I do here on this channel. The only way you're going to be able to stay informed is if you're subscribed, because every single day I give you the news. You don't have to watch any other financial news out there because I bring each and every piece of the data to you. I hope you will join the 282,000 subscribers. Hit that subscribe. I'll see you tomorrow. Take care.